Welcome to CV Labs. We are more than happy to have you here today under these special circumstances. We are grateful to our partners, PwC and the Canton of Zug, for the support to make this event possible. Tonight, we are going to have experts from PwC developing on taxation of companies and the tax treatment of cryptocurrencies. I will talk a little bit about the format of this event. First, Mr. Beat Bachmann from Canton Zug will be addressing a speech to the business community. After that, our experts will start explaining about the topic. Everybody is welcome to post general questions in the live chat. For specific questions, we will share all specific details from the experts, and then you can PM them directly. On the name of CV Labs and CVVC, we thank you all for your presence today, and we wish you to stay safe and to keep going forward under these special circumstances. Right now, I will pass the microphone to Mr. Beat Bachmann, who will address a special message to the community.
Thank you so much, Fabiola, CVVC, CV Labs, for inviting me to this great event tonight. Welcome, everybody. On behalf of the Canton Zug, I'm very happy that I can meet you, at least per live stream, if not physically, and to talk a little bit about the conditions of doing business in Canton Zug. However, as we all know, the sun is shining outside still in our dynamic business location, and privately, since few days, life has changed dramatically, and I'd like to do just some comments, on the Corona situation, because as an economic department of Canton Zug, we're in the midst of this situation. We're spending almost all day on the phone, answering calls from companies, and we're fully aware of the really dramatic situation where privately, people as an entrepreneur with small companies do not know what happens in 2 to 3 months, if they can even be able to survive. And on behalf of the Canton, I really would like to express our utmost solidarity and to really be here for you. So, as you know, we have sent out, for example, information about what the Swiss government, but also Canton Zug is doing in terms of, for example, reduced labor, etc. And just this afternoon, our government of Canton Zug has issued a media release that they are assessing further economic measures for small companies, especially in addition to what Swiss government is doing. So here is just the offer. We really are with you, and we hope that, as all of you, we all hope that the situation is really going over fast. So now to the evening topic. I mentioned, COVID is here. We would really also urge you to, adhere to this rule that the government, Switzerland and Canton is issuing. And in that respect, I'm really happy and thankful that CVVC went on to conduct this event tonight and not cancel it, because we believe, we have also to show life is going on and we have to do the best out of it. Now, I just would like to make 2 points in my opening. One is that I'm obviously very proud that this ecosystem of blockchain and crypto has established here in the last 6-7 years. And you see here a couple of points, a couple of facts, and in the middle you see that CVVC, Crypto Valley Labs, since the beginning of this ecosystem has really helped to drive and to contribute to its growth. And we're really thankful for that, and I will get to the report later. You see here also the latest study, the result of the FinTech study, which is done on an annual basis since 2013 or 14 by the Central Switzerland University of Applied Science, the Institute for Finance. And it is really also with lots of pride that we see since the beginning of this study that the Zurich area, which Zug is a part of, ranks globally number 2 behind Singapore. And we know that this FinTech study does not include only blockchain, but it's a part of it. On the other hand, we are happy that the Crypto Valley Association, with its roughly 700 members, is also helping to drive this ecosystem. And especially, as I mentioned before, CVVC, with its database, with its annual report, with its online database of companies, which shows today approximately 800 blockchain companies, the Crypto Valley, which is all Switzerland. Of that, almost half in Canton Zug, which is obviously a great story. And we're happy that we can, support this ecosystem in many ways. And as this is a tax event tonight, basically conducted mainly by PricewaterhouseCoopers, I'm happy, that PwC has very early on, with the tax reform last year, produced this nice graphic, which we always show in our main slides for Canton Zug. It's not just nice because Canton Zug is in the front, but this is obviously very nice, but it's also a very good overview of basically all the tax regimes and all the possibilities, from ranking from the standard tax rate for companies down to the additional measures. So in the case of Zug, as you know, from 2020 on, for any type of business, our maximal income tax rate is around 12%, and with additional measures, be that by R&D deduction, by patent box, IP, etc., transition measures, you can even get somewhere down to 9%. So this, as a small sales pitch for our Canton Zug as a good location to do business. There are many other factors, and again, in order to close, I would like to express my really high appreciation for all the players here, for all you as a company here who contributes to this lively ecosystem. And I look forward to a further great collaboration. And as said, feel free to contact us anytime for any question. Thank you.
Hello everyone, good afternoon. My name is Silvan Amberg. I'm working at PwC. I'm responsible for corporate taxation of cryptocurrencies. And tonight we would like to give you an overview of the compliance obligation that a company in Switzerland has, especially with regard to cryptocurrencies. And we look at this from a corporate tax perspective and then also from a VAT perspective in the second part. So the idea is to give you first a kind of an overview of the tax system, like what a Swiss company actually has to do in terms of tax compliance, like from a general perspective, but then also look at some specific as it comes to dealing with cryptocurrency. From a timing perspective, we will not be able to go into very details of something like doing an IC or an STO or operating a crypto exchange. It's really more about what does a company has to do when it buys or sells Bitcoin or it pays its employee with cryptocurrencies. Let me start with the corporate tax system. In Switzerland, we have corporate taxes on the federal level and also on the cantonal level. On the cantonal level, by now, the tax laws are pretty harmonized, so the tax rules are very similar from each canton to each other, but the cantons still have a lot of flexibility with regard to the tax rate. As you can see on the map here, there are certain cantons that have lower tax rate than others, but that's actually the main difference between the cantons. And there is a kind of, as a company, you become tax resident in Switzerland when you incorporate your company in Switzerland. That's kind of what we call the unlimited tax liability. Or you become tax subject if you operate in Switzerland through, for example, a branch or permanent establishment. And then, under these circumstances, you become a Swiss taxpayer, and then you have to file your tax return. Now, what does it mean? I mean, filing a corporate tax return means you have to file every year, you have to file a tax form, send it to the tax authorities. The deadline that we have in Switzerland is, it depends in every canton, it might be a bit different. In the canton of Zug is the 30th of September. However, this deadline can also be extended. So typically there is not really a rush to hand in the tax return early in the year because you still have time until the 30th of September, and then you can still extend the deadline. The canton of Zug is very generous. You can actually extend the deadline until the 31st of March of the year after. When you are a new company, that's also important to understand. When you have incorporated your company during the year, you're actually not required to file a tax return in the first year. If you decide to do what is called an overlong business year, so you do your first financial year end by the end of the next year, so you're business year, your first business year is, for example, is 18 months, then you only have to file a tax return after you have closed your financial statements for the first time, which is good because then you don't have to file a tax return after 3 or 6 months of your incorporation. Now, how is the taxation, how is it calculated? In Switzerland, we are pretty closely following the accounting treatment of the company. That's why it's very important to understand how things are booked in the accounting, and apart from certain kind of measures that the tax authorities can take to change the taxable profit, it's really more or less what comes out as a profit from your financial statement is also taken into account for tax purposes. So once you have your calculation of your financial statement ready, then you take your taxable profit, and this is the basis to calculate your income tax and your capital tax. That's why I think it's very important to understand how cryptocurrencies are treated from an accounting perspective, because that's then in the end driving how you end up paying your taxes on your cryptocurrencies. Now, there are two general principles that we have in Switzerland for accounting for cryptocurrencies. I don't want to go into the very detail, but the standard way of looking at cryptocurrencies in the accounting is that you book it as a financial or an intangible asset in your balance sheet, and that means you book it at your acquisition costs, and that's the green line that you see here. So you put in the value that when you acquired it, like for example, you bought it, and then you keep it at this cost. So even if the value of the cryptocurrency goes up, that doesn't mean that you have to actually pay capital gains tax on that value increase, because you keep it at your cost. The only thing is you have to do under the Swiss accounting principles, if by the year end the value of the cryptocurrency is lower than your acquisition or your accounting level, then you have to book an impairment. So you have to book the loss that you're incurring on a timely basis, and you cannot just keep it at a cost if the market value has dropped below. So then you would have a reduction and then also a loss from a tax perspective. But then at the only time when you actually pay tax on your cryptocurrency would be when you sell it, because then you realize the capital gain, you receive, for example, fiat currency against it, and that's when you actually book the accounting gain, and also you pay the corporate income tax in that specific year. There is also the option, and as an alternative approach, if you keep your cryptocurrencies as as asset for trading, and if the currency has a market value that you can observe on a daily basis. For example, if you trade with Bitcoin or Ether, you can opt from an accounting perspective to keep that at fair market value, and then that's the blue line here. You would constantly change the value as it develops over time, and then constantly realize capital gains or losses as they occur. I think in the market currently we don't see that happening very often. It's a bit more complex, and often companies are keeping that kind of as an investment, or sometimes they even own their own tokens, and they don't use that as a trading asset. They really kind of use that as a means of financing themselves, and I would say it's much more common to keep the accounting at costs. So that's actually probably the most important aspect when it comes to paying corporate income tax on cryptocurrencies. Now, let's get a bit more deeper in the different types of tokens that we have. The Swiss federal tax authorities have issued a working paper where they qualify cryptocurrencies, and they put them into 3 baskets. It's a bit different than how FINMA is looking at it. They call it a bit different, but it's actually like they distinguish between native currencies, native tokens, which are, for example, cryptocurrencies. Then the typical utility tokens that give you a specific utility that you can use it, but it's not really like a financial asset where you get a financial return. And then the asset-backed, they call it asset-backed token, not asset tokens, that give you more like a financial return, some kind of an interest or a dividend or anything that you would actually see as a financial investment. And the tax authorities specifically mentioned in their paper the equity tokens, participation tokens, and the debt tokens that they qualify. A token that is not defined specifically is what is coming, I think, more interesting nowadays. These are tokenized shares. So that's important to understand. When tax authorities speak about equity tokens, they speak about a token that has similar properties like a share, but it's not actually a formal share. And this is very important to understand because in Switzerland we have what is called a stamp duty, a securities transfer tax that you have to pay when you deal with shares or bonds. And these only apply for debt token like bonds and tokenized shares. So I think this is really from a compliance perspective, the most important thing to consider is as long as you're dealing with these kind of more traditional utility and native tokens, apart from paying your corporate income tax, and we will look later at the VAT aspects of it, but there is not really a lot of compliance obligations around that. You just have to book them in your financial accounts. But as soon as you start to deal with these kind of more complex tokens, you need to make sure that you're not coming into a situation where you have to pay securities transfer tax. So you need to analyze your token and actually understand under which of those categories falls. Is it a taxable security? Do you have to register as a securities dealer? Even if you don't require a regulatory license to deal with it, you might require a tax registration and you might have a filing obligation from that perspective. I don't think in Switzerland there's a lot of these type of tokens already on the market, but I think it's coming more and more. Security token offering, tokenized shares. So this will become more and more important over time. I mentioned here also withholding tax because when you have a token that has properties of a debt instrument or a share, there might also be a withholding on it. So you need to then understand whether you have to you can claim back that withholding tax either in Switzerland or in a foreign jurisdictions. But as said, I think at the moment this is a bit less of a relevance. I think most of our clients, they are dealing with more of this type of tokens actively. So I think there the message is really, as long as you have your accounting right, the tax authorities will generally accept that accounting treatment. So with this, I would like to hand over to my colleague Marcella for the VAT part.
Hello everyone. My name is Marcella Cenesic. I specialize in VAT for crypto and blockchain industry at PwC. And in the second part of the session, I would like to talk you through the VAT aspects of crypto tokens and cryptocurrencies. Before we start, let's quickly look at the VAT concept. So the concept behind VAT is very simple. Whoever consumes goods or services needs to make a financial contribution to the state. That means that VAT taxes goods and services that are consumed. There are two exceptions from the basic principle. The first one is that there are limited goods and services, the consumption of which is exempt from VAT, examples being insurance services, education and healthcare as an example. And the second exception is there are some items which are not consumable. That means that they cannot be used up and therefore they are not subject to VAT. Examples being money and land. So before we move on and see how this basic concept applies to crypto tokens and cryptocurrencies, I think it's worth quickly looking at the main categories of the tokens. And this is because, as you will see later on, because the VAT consequences are greatly dependent upon the type, the category, or the functionality of the token. So based on the published practice of the VAT authorities, there are currently three categories of the tokens that we differentiate between. They are payment tokens, asset tokens, and utility token. A payment token is a token which only serves as a means of payment. Example of such a token is Bitcoin or Ether. Asset token is a token which confers a partial or complete interest or ownership interest in a property. For example, ownership in a company with an entitlement to receive dividends or to participate in the revenues of the company, or for example, an ownership in a real estate or in a property. And lastly, the last category, utility tokens. So utility token is a token which confers a specific use, a specific benefit for the token holder, or also an entitlement to receive a specific service at some point in the future. So now let's look at the VAT consequences associated with the tokens. Because money is not consumable and not subject to VAT, the same applies for payment tokens. Payment tokens equal money, and therefore they are not subject to VAT. That means if you buy, if you sell, or if you transfer payment tokens peer-to-peer, or if you swap payment tokens for other tokens, no VAT applies. That means you will never pay VAT on the purchase price or on the sale price, as long as the token is a payment token. A similar position applies to asset tokens. Asset tokens are considered to be exempt from VAT, and therefore the purchase, the sale, or the transfer of asset tokens is exempt from VAT as well. The greatest complexity from a VAT perspective sits with utility tokens. This is because a utility token can be either taxable or exempt depending on the functionality that the token confers. That means if the functionality that the token confers is taxable, for example, an access to a platform, use of an ecosystem, then the utility token will be taxable as well. If, on the other hand, the utility of the token is VAT exempt, for example, if the token confers an insurance cover, then the utility token will be VAT exempt as well. As I said before, as the greatest complexity sits with the utility tokens, I would like now to spend some time and focus on the taxable utility tokens so that you can see what it means specifically in the practice. So when you, as a Swiss buyer, taking an example, purchase taxable utility token from a Swiss seller, from a Swiss counterparty, for you as a buyer, there is not much to worry about. This is because the seller will have to charge VAT and to pay to the Swiss VAT authorities. So what happens when you buy a utility tokens, you will simply pay VAT on the purchase price. The situation is very different when you as a buyer decide to purchase or to buy taxable utility token from a non-Swiss counterparty, for example, from a foreign crypto exchange. In that case, the foreign seller will not charge any VAT to you on the purchase price, but instead, what he will do, he will shift any VAT liability back to you as the buyer of the tokens. In other words, you, as the Swiss buyer of the tokens, will have to determine, and you are obliged to determine, whether you need to pay any VAT on the purchase of the tokens from a non-Swiss counterparty. So you would have to first look whether the token is taxable, and if so, it is very likely that there is VAT liability to be settled. If you, as a purchaser, are a VAT entrepreneur, that means if you are in business and if you are registered for VAT, then you will have to pay VAT on the total purchase price of the tokens from the outset. On the contrary, if you are a private individual and you are not registered for VAT, then you will have to look at the total value of the tokens that you purchased during a year. This is because there is a threshold of 10,000 Swiss francs during a year, and if your total purchases during the year are below 10,000 Swiss francs, then no VAT applies, and then your tokens will be, if you like, free of VAT. Having covered the purchase of utility tokens, I would like now to look at the use of utility tokens. By saying use of utility tokens, I mean the transfer or provision of utility tokens to someone else to settle a payment obligation. For example, you will transfer or provide the tokens to someone else in order to receive goods or services in return for your tokens. Or you can also swap your utility tokens for other type of the tokens, for example, for a payment or an assets token, or for another utility token. So if you do so, if you provide to a Swiss counterparty, to someone else in Switzerland, taxable utility tokens, this will be seen as so-called barter transaction. That means it will be a double exchange of tokens. So you will provide tokens to someone, and then you will receive goods, services, or tokens from someone else. That means when you provide utility tokens that are taxable to a counterparty within Switzerland, you will be liable for VAT on the value of the token that you provided to the Swiss counterparty. The situation changes when, for example, you decide to send or to provide the tokens to a counterparty established outside of Switzerland. This will be much easier because in the cross-border situation, no Swiss VAT applies to the party that holds the tokens and transfers them to a counterparty established outside of Switzerland. the only thing that you need to be careful about, you need to be in a position to demonstrate the residency of your counterparty. So as long as you can prove that you transferred the tokens, taxable tokens, to a counterparty outside of Switzerland, no VAT will apply to the value of the tokens that you transferred. So we have now looked at the basic concepts around the tokens. So let's now look at some special cases.
Okay, so after we have looked into the general tax rules with regard to cryptocurrencies, we would like to show you two special cases that we have seen giving a bit of headache to some of our clients and that you might also face in your daily activities dealing with cryptos. The first one is, like, let's assume the company has made an ICO or STO and has reserved a certain portion of its token for its founders. That has happened quite a lot, that the founders said, okay, if the ICO or STO is successful, these founders are getting some of the tokens. And the tokens are sitting within the company. And at some point, these tokens need to be transferred to the founder. So here we have a founder who is the owner of the company, and then here we have the Swiss company, and they have reserved 10% of the tokens for the founder, and the tokens, because they have been generated by the company itself, in the accounting the value is 0. However, we know, because the token is already trading, we know that the token has a fair market value of 100,000. So the question often arises, well, what can we do? Can we just take it out at 0? Can we just transfer it because we already promised it? But actually, you have to distribute them to your shareholder. Because these tokens have a value of 100,000, the tax authorities would not accept if you just give a value of 100,000 for free, which is called a deemed dividend distribution. You're actually distributing something that has a value to your shareholder, which is treated equally as a dividend of the value of 100,000. Now, dividends in Switzerland are subject to a withholding tax of 35%. These 35% can be recovered or reclaimed by the owner if the owner is taxable in Switzerland and he declares that dividend in his tax return, he can get the money back. But now, what do you have to do? The problem is that because you're actually distributing just a number of tokens that have a 0 book value, you cannot say, I just take 35% of my tokens and send it to Bern, to the tax authorities, but you actually would have to pay 35,000. So you have a liability of 35,000 to send to the tax authorities, and you have to pay that. But this is a tax that actually should be borne by your shareholder, because it's a withholding tax that is actually the kind of the financial obligation of your shareholder. So what you have to do in order to avoid further tax problems is you pay an amount of 35,000 to the tax authorities. You declare that with a specific form where you report that, and you also ask your shareholder that he has to pay you back the 35,000. Because if you wouldn't do that, if you just pay the 35,000 to the tax authorities and the shareholder doesn't have to pay you back, it would be considered as, again, another distribution. So you distributed another 35,000. And that goes on and on and on, and you would end up with a much higher tax charge because you distributed, again, an additional amount. So what we typically recommend, if a company wants to distribute tokens, that they distribute them, they pay the withholding tax to the tax authorities and then recharge that amount to their shareholders. The shareholder can then reclaim, if he's in Switzerland, by filing his normal tax return, or if he's a foreigner. We have often seen cases where the shareholder is sitting outside of Switzerland, that he can reclaim this based on his double tax treaty. He might not be able to get back the full amount, but he might get back a portion of it, and he has then to file a specific form to the tax authorities and get the withholding tax back. So that's kind of the corporate tax filing obligations that you have. And there is also the question then whether this is an event which is taxable from a VAT perspective. And as we have seen in the VAT part, it largely then depends on the qualification of the tokens. If the token is a utility token and the utility token is taxable from VAT perspective, then it's important to keep in mind, if your investor is sitting in Switzerland, giving him that token is like providing a service. So that means that you actually have to charge VAT on that as well. So there is an additional VAT burden Even so, you distribute the tokens and you think you distribute them for free, but it's actually a value of 100,000, so there is a VAT charge on that as well. This is just something to keep in mind, that those tokens have a specific value and they need to be dealt with from a tax perspective properly. Another point that we see quite a lot is that employers want to pay their employees with tokens. It could either be because they want to support the crypto ecosystem, that they want to pay their employees partly with Bitcoin. It could also be that they have their own tokens. They want to incentivize their employees and they want to give away some of their own tokens to the employees. And the question then arises, well, what do I have to do with that? How do I need to declare that? Well, from a salary tax perspective, it is not that difficult as long as you can determine a specific fair market value. So if your token is listed, or if it's Bitcoin, then it's rather easy. You just have to take the value of that token in that specific date. You have to prove that is the correct value. So either it's a value that is already calculated by the tax authorities, or if it's not available because the token is maybe not such a common token, you have to calculate the value by yourself. You would probably take an average of larger crypto exchanges if they have different values on the same date. But that's something that you can calculate then by yourself. And then that value you take as kind of a salary in kind. So this is typically not the difficult part, but what's always important not to forget is that apart from the salary deductions, like the social security deductions that you have to do and to put it on the salary statement, if you pay a salary in form of a utility token, and the utility token again is a taxable token from a VAT perspective, then you need to take into account even that is a taxable service for VAT purpose. So you have to charge then 7.7% VAT when you give those tokens to your employees. So depending on what your token is, that might be a downside. You might be better off if you just take the market value that the token has at that point of time and then give the same amount in cash, because if you pay the salary in cash, there is no VAT on it. So that's then maybe something to take into account when you structure your incentive plans. But I mean, incentive plans in general, they can have more complexity if you, for example, start including blocking periods or specific clauses, and then it gets quite complicated. So I think if you have such a structure, I think it would be advisable to really do a tax analysis on that. But I think this is really for rather simple salary payments in tokens, which I think these two aspects are relevant. You need to define the specific price of the token at the time where it's paid to the employees. And secondly, don't forget the VAT consequences if you pay in a utility token. Thank you very much, and have a good evening.
This is all for today. Thank you very much for your presence. We hope you enjoy, and this was informative. Here at CB Labs, we do everything possible to keep you informed. Expect more events from our side, and for the moment, stay tuned and cheers.